Hi, Sarah. First of all, thanks for having both John and I. Hope your family and friends have been faring well through this difficult time. I want to thank John of Aramark for joining me here today because we think this is a very important initiative. It started out really over the last 2.5 weeks when my wife Deborah and I were looking to do something for the frontline healthcare workers who were doing such amazing, incredible service under dangerous conditions across all 5 boroughs of New York City. We're New Yorkers. We see what's happening. We're born and raised here, and we're just in awe of the incredible, heroic healthcare professionals putting their own health on the line to care for others during this pandemic. So basically, seeing all these great people who are stepping up, a mutual friend introduced me to John Zillmer at Aramark and suggested we team up to help the 100,000 or so healthcare workers on the front lines across all 5 boroughs. So as you already said, our Healthcare Heroes program is going to provide between 300,000 and 500,000 packages of shelf-stable food, household cleaning, and personal care products, as well as over-the-counter medication to alleviate the burden of healthcare professionals having to shop for themselves and their families. The whole goal is to reduce stress and be a net positive, so we also teamed with the New York City Department of Emergency Management and the Greater New York Hospital Association to make sure all the logistics were coordinated and that distribution runs smoothly and safely. Aramark is handling supply chain procurement, packing the bags, and distribution to the hardest-hit hospitals. The deliveries will be made at different times to accommodate shift schedules, and the Red Cross has also teamed up with us to help with direct distribution at the hospital sites to workers while ensuring proper social distancing. Robin Hood also came on as our partner to manage a match component to a part of our gift because we know people in New York are looking to make a difference. We have already received significant donation pledges, thanks in large part to many of my Apollo partners and other friends, and are well on their way to the $30 million program goal. So with this match, just $30 buys a package for a healthcare professional that includes $60 to $70 worth of food and household supplies. But any amount is welcome.
And we're flashing the details on the screen as you speak, Leon. It's good to hear that you're raising more money. John, talk a little bit more about your role and your broader role in this crisis, how you've transitioned uniform factories, for instance, into making PPE, and what else you guys are doing at Aramark.
Sure. Thank you very much. First off, on behalf of all of Aramark, let me thank Deborah and Leon for their generous donation to support this initiative. As Leon said, this is an extremely difficult time for the healthcare professionals on the front line in New York City, and we're hoping these packages make their lives a little easier. As you said, Aramark is the largest U.S.-based provider of food and facility services, and we have a number of employees that are being re-engaged to go ahead and support this program, people that we've had to furlough as a result of the lack of activity. So we've re-engaged our workforce to go ahead and provide these services. We've got a long history of addressing urgent needs, supporting others in times of crisis, from feeding people at the Astrodome during Hurricane Katrina to the Chilean miners trapped deep underground. And as you mentioned, this morning we announced that we're converting some of our manufacturing facilities on the uniform side to manufacture personal protection equipment for both the healthcare and food service industries. So we've been significantly impacted. I'm sorry, go ahead.
No, and maybe this is where you were going, but I'm just curious how your business has been hit when so many of your customers from NBA teams, stadiums, schools, and other corporations are essentially shut down right now.
Yeah, that's absolutely right. We have been impacted very significantly across a range of our businesses, but we do provide services in several sectors that continue to operate, both in the healthcare community, K through 12. We're serving over 700,000 meals a day on a free and reduced basis to school districts across across the country, with over 250,000 a day in the city of Chicago. So we're also providing facility services to many of the companies that need deep cleaning, hygiene services. That's a business that continues to operate, as you would imagine, at full tilt. And then we're in a couple of other businesses as well that continue to be very active. Our traditional business dining, health, campus services, and sports and entertainment are significantly impacted. But at this point in time, campus dining really was beginning to close down for the balance of the year. So we're hopeful that universities will continue to operate going forward in the fall, and we're looking forward to hopefully a full school year then. And in the meantime, we're scaling activities for our individual customers. We have a lot of clients who need services of some type, and so we're scaling our operations in order to go ahead and serve their unique needs to the degree that they need them. And in the meantime, we've got a very flexible, low fixed cost operating model. And as a result, we're able to manage through this, I think, pretty effectively. We've got a very strong capital structure, good balance sheet. And so we're poised for a recovery and waiting like everybody else for that day.
Yeah, Leon, it's a reminder hearing John talk about some of his clients of the sudden stop that we are in right now. How are you thinking about just how severe and long-lasting this recession is going to be?
Well, certainly it's a challenging environment. I'm fundamentally an optimist, but it's really far too early to make predictions. You know, when we founded Apollo 30 years ago, we set out to create a value-oriented firm that could manage successfully for our investors. It was across private equity, across credit, and across real estate, and do it through market cycles. You know, we're continuing to work hard for our investors in this environment, as we have, you know, really through the last 4 or 5 major downturns since 1990. One, to protect the pensions and retirements of those on the front lines, which includes police officers, firefighters, teachers, government workers. And clearly, you know, the last few weeks have shown us the benefit of our Apollo's value-oriented approach, which has always emphasized downside protection and less leverage use, and also to really be able to navigate cycles. And, you know, clearly the first and foremost thing we do is protect our own portfolio for our investors. But because we have a very strong balance sheet and a lot of dry powder, we also try to be opportunistic and find ways also to serve those same investors in this downturn. But, you know, I think, as we all know, this is a two-part play. The first part, I think the government, the Congress, the Treasury, the Fed have actually done a very good job, and that was basically to make sure the financial system didn't collapse, because I think there was that concern three weeks ago. And by injecting so much liquidity into the system, I think, one, it helps all the workers that are being furloughed, but it also gives real confidence, which is incredibly needed to stop a real panic. But that's really only the first part of the equation, or the part one of the two-act play. Clearly, the big question is, you know, how quickly can we get workers back to work, generate demand, generate revenues, and make sure that this is a recession and not a depression. And so clearly, we're modeling, you know, coming out of this in 6 months, in 12 months, in 18 months, and to try to deal with each scenario appropriately.
So you said you were being opportunistic. I think during the last recession, financial crisis, you bought a lot of distressed debt. Where are you seeing those kind of opportunities present themselves right now?
Well, you know, I think the markets are incredibly volatile. You see them one week and they're gone the next week. So you have to be prepared. You have to have done your work. You've Clearly, we try to deal with industries that we know well, with capital structures that we've studied well, to figure out, where we want to be at what price levels, and I think that takes real patience. There was a quick high grade opportunity a few weeks ago, and that basically bounced back. So I think it was a 1 week window, and now I think it'll be a much longer, patient, study of many different credits, and it's not just a matter of buying debt. It's also being able to supply capital to industries that are in real need, or businesses helping a lot of great American companies who don't have access to liquidity right now.
Are you talking about hospitality and leisure companies, cruise lines, offering bridge loans to those companies?
We're all of the above. We're looking at leisure. We're looking at entertainment. But we're looking at areas in insurance. We're looking at companies that we've followed. Basically, we have the largest alternative credit platform in the world, and we've been one of the greatest, I think, providers of return in the private equity business, and that covers 20 different industries.
Leon, I wanted to ask, if I may, about what your views are on how any government bailouts, if they happen, should be shaped. If a company does take government funds on board, I'm talking more about the bigger companies than the smaller ones, do you think it's fair that there's a haircut of some sort to the equity holders? And do you think it's fair that the government gets exposure to future upside, however which way that's structured?
I don't think I'm smart enough to give you an intelligent answer on that. I remember the last downturn. The TALF program, I think, was very successful. There was $200 billion that was made available. I think only 70 was used, and every penny was returned without a lot of government equity upside. I think this is quite different from the past. I mean, in the past, some businesses maybe were over-levered. They were maybe not managed as well. But you have so many great businesses today, through no fault of their own, that we're doing terrifically as recently as a few months ago, where the bottom has fallen out because of a global pandemic. So I think government is doing what they need to do right now, which is to make sure the economy is really the financial system is well oiled, and there's enough liquidity out there, and then it'll have to look industry by industry, whether it's airlines and other transportation, and I mean, clearly our auto industry is awfully important to us. So I don't quite view this in the same bailout lens that was used 13 years ago.
You mentioned, Leon, that you've got lots of dry powder, that you're biding your time, and essentially should be able to make some investments that long-term make you a profit during this time. Do you think, therefore, that it is unfair for companies that are owned by private equity companies like your own to receive government help? If you've got dry powder, should that be going towards companies that are feeling the stress that you own, as opposed to fresh investments? Well,
I think we are using our dry powder. As I mentioned earlier, first and foremost is to serve our investors. I view that as kind of a sacred trust. These are teachers, as I said, policemen, firemen. So the first thing we do is to protect our portfolio, use our capital for that, and then we also try to get better returns for those same investors and pension funds. We've made recommendations, as have many, basically to help the economy. When the economy is helped, we're helped, as are many, many others. I don't quite, again, view it as private equity versus the rest of the world. Most of the recommendations, or all of them we made, were to help the investment grade market. It wasn't for private equity. Again, we're all in this together, and it's pretty important that we have a healthy economy.
Speaking of your performance and your firm, Leon, we don't get the chance to talk to you about this every day, so wanted to ask how everything is doing. I know you sent a company-wide email last year following Jeffrey Epstein's indictment, contextualizing your relationship with him. Has that had any impact on the firm?
I don't believe that has had an impact on the firm. It was a professional relationship that we had. It never involved Apollo, and it really never affected any of our investments or any of our investors or any of the new money that's been raised, which was raised at the greatest clip we've raised since then.
Wanted to also ask you finally about energy, because I know you've got some exposure there, and we've seen this unbelievable 1-2 punch. What do you think this sector of the U.S. economy is going to look like when we come out of this?
Well, it's hard to tell. I mean, fortunately, I think our exposure at Apollo has not been great. It's in low single digits in terms of our investment portfolios. We've taken a few lumps, but nothing terribly dramatic. Those markets are very hard to gauge. Right now, you've seen the agreement between Saudi and Russia, and I think it's a good thing. I think probably shale will be kicking in also, reductions, but it's going to take some time to create parity in terms of supply and demand because it's so volatile in terms of what really is the demand long term. We've never been through dramatic jolts such as this pandemic on a worldwide basis has generated.
Do you think we've seen the worst of the market panic around it?
I'm not smart enough to know that.
Leon Black, we appreciate the interview. And we appreciate all you're doing for the healthcare workers in New York City. Thank you for joining us. John Zillmer, thanks to you as well of Aramark and your participation in that effort.